Manish Sonthalia, Director and Chief Investment Officer, MK Investment Managers, joining in on the show this morning. Manish, very good morning to you. I know it's the whole conversation everywhere is AI right now. Do we need some super artificial intelligence to figure out what is ailing Indian markets? What is your take? Can't quite hear you. I think you're on mute, Manish. You'll have to unmute.
I think as far as the entire
There we
market
go.
is concerned, entire market, I think we have already bottomed out in spite of the AI stuff which is going around. But as regards the IT space, I think AI is clearly a disruptor, that is for sure. Whether turnover of Indian IT services companies will fall off the cliff, maybe not. And, the stocks have corrected. But we got to figure out the margins. The benefits of AI broadly are all going to percolate to the client. And the key thing to ponder about is the margins figure. So in all of this, valuations are getting reset. And let's assume for a moment that, of course, there should be growth. But let's assume for a moment that there is no growth. And how do you build margin of safety around IT stocks? Then basically you look at free cash flow yield of businesses, which are almost zero growth or very little growth. Let's say 0 to 2% or 3% sort of a growth. Basically, you should buy free cash flow yield businesses where you have 5 to 6% free cash flow yield business. I think at those sort of valuations, there'll be ample margin of safety. So, we still are trading slightly higher on the valuation side as far as the Indian IT companies. And, it's basically the short term versus the long term. Short term, you have a knee-jerk reaction on the downside, but we got to figure out where the value resides in the long term. I think Indian IT companies will wrap around the AI applications to make themselves useful to their clients, overseas clients. But in the short term, maybe valuation reset, exit multiples, growth. These are things to ponder.
If you let's just take that question a little further as far as Indian IT companies are concerned, Manish, because it's been a seesaw of investor interest that we're seeing. And the question is whether what we're hearing from the top IT companies is convincing or not. I mean, we heard the Tata Sons chairman, we've heard Infosys a couple of days ago talking about its plans, and every large IT company is gearing up. Is that enough to come up to speed with what is required right now at a time when no one's sure what the future is looking like?
The whole point is we are late in the investing game in the AI. The world was investing 5, 10, 20 years ago, and we are talking about when the revolution is upon us. And it's basically better late than never is basically where we are in the Indian IT space currently. So had we done it a few years ago, we would have been in a much better position. But nevertheless, we are doing it now. So that's where we are. And so the entire business model of Indian IT services is going to get disrupted. That's for sure. So, we can go back in history and say that, you had ICE and an EV, but both flourished. So similarly out here, Indian IT, traditional IT business model incorporating AI will continue to exist. But the whole point is how is the transition going to look like? So again, coming back to the same point, look at margins. And I think here is where the entire conundrum of the valuation growth on the PAT level is going to play.
At the NDTV, just to your point, Manish, and then I'll come back to a specific question on which IT stocks do you think or which IT companies do you think are going to make the cut. On being late, at the NDTV AI Summit yesterday, there was a professor from UC Berkeley who was saying that it doesn't matter if you're second or third, it just depends on who lasts longest and who does well. Who remembers the first search engine? But it is Google who came in later that has dominated for the last several decades. That was the point he made. And the first search engine was Alta Vista, and no one really remembers it. So in that context, do you think that, on this debate on whether we need to re-look at Indian IT companies instead of writing them off, that the largest ones will survive or the smaller, more nimble, agile ones?
The nimble and the agile ones are going to survive because we are dealing with very large workforces in large Indian IT services companies where when the business model gets disrupted, the time and material model gets disrupted, it's outcome-based pricing, incorporating AI platforms. then basically reskilling those large workforces are going to be challenging. And there's a social angle also to it, whether you're letting go so many people and all of that. But I think the Indian IT services, the Indian IT pack, first of all, the product driven companies, they will be much better off. Second is basically your mid-tier IT companies incorporating very fast AI platforms for their clients, and which have a nimble workforce. So transition is where the entire focus is going to be, and who is going to be fast enough to do that is going to capture a lot of the market.